So I think we're live. Hello, everyone. Thank you for joining. And today we'll talk about Athena.fi. We have the co-founders, the CEOs here. Feel free to introduce yourself and give us a great introduction about the V33 model and Athena.fi and what you're building there.
That sounds good. But first, thanks for having me today. I was looking forward to present Athena and do a deep dive and also to spill some alpha. So quickly about myself, I'm Theseus, one of the co-founder of Athena, a decentralized exchange and native liquidity layer to the BNB chain. We launched back in beginning of January, around the 6th, I think. And we've received quite a bit of growth. We're currently in the top 4 in terms of daily volume on DeFi Llama and growing. We currently offer many different types of automated market makers that can offer great price execution for every kind of tokens, whether it is stable coins, correlated assets, softly pegged assets, or even strictly volatile coins like governance tokens or Bitcoin. And what's really special and unique about Athena is that it operates on the V33 model. And I guess some of you I've never heard of it. So what I can do, because it can be a bit complex at first glance, is that I am going to share my screen. Please let me know if this works.
Of course, just click on present, share screen, and I will add it to the stream. Then everyone can see.
Okay, now I think you should be able to see my screen.
Yes, we can see your screen perfectly.
Oh, awesome. So this is our own page. Let me start from the beginning. So obviously on Athena, you can swap any kind of tokens. We have what we call a master router that when you're going to input 2 assets and input the amounts, it's going to split your orders between the different pools to give you the best price execution. Because as I said, we have many types of AMMs, and sometimes that means it needs to route through different kind of pools to get the best price execution. So this is just on the swapping page. It's powered by OpenOcean. It's a great solution to provide the best price execution while routing directly through our own liquidity pools. So then on Athena, this is where things get special compared to other dexes. When you provide liquidity, you only earn our token, Z. So here we're on the liquidity tab. You can see the APRs for providing liquidity with different assets. It's super easy to provide liquidity. You can directly get here and you directly arrive on the liquidity providing tab. So this, what you're seeing right now, is for concentrated liquidity, which is our latest release. It's not based on the Uniswap V3 model. We work with Algebra on this, which have their own custom solution with a couple of advantages, such as dynamic fees instead of having multiple fee tier, meaning multiple pools, which would be inadequate with our model. And compared to providing liquidity on Uniswap V3, as a user with very little knowledge, providing liquidity on Uni V2 was very easy, right? You select two assets, you provide 50% of one asset, 50% of the other, and you stake. When you go with concentrated liquidity, things become a bit trickier, if I may, because now you're providing liquidity within tighter range, within specific ranges, and you're free to choose the range you want. And a lot of people are confused at this step, because when you provide liquidity in concentrated ranges, if you get out of range, let's say you provide liquidity from $1,000 to $1,500 for Ethereum, and Ethereum goes above 1.5K. At this moment in time, that means that all your assets will have been sold, all your ETH for USDT, for example. And so it can also magnify the impermanent loss. So we decided to go with a way more retail-friendly solution. And on Athena, all the concentrated liquidity is directly managed with Gamma, our LP manager. So it's almost as easy as providing liquidity on UniV2. You select both assets, you select the strategy. So you have 2 strategies, depending on if you want to provide within tighter range or wider to mitigate impermanent loss. And then you just need to select exactly the assets you want to put, add liquidity, and stake. So it removes a lot of the barriers that we're seeing that many retail users get lost when they're trying Uni V3 or PancakeSwap V3 as well.
Exactly. So I want to just quickly ask you something here because that's very important for the listeners. Because the narrow and wide strategies also provide different kind of yields. The narrow strategy is more risky and provides more yield, whereas the wide strategy is less risky and provides less yield. So this is paired to the impermanent loss so that people understand. I just wanted to point that out because a lot of people really do not understand. But here you can see, everyone, please closely listen. It's very easy to go the riskier strategy, and Thena.fi makes it as easy as possible for any kind of user to join and onboard. That's why I personally like what you guys are building, because it's very easy to use. And you have done a lot of improvements on that side. I really like it.
I appreciate the kind words, but yeah, exactly. Basically, our first question was how can we make it as easy as possible for users to provide liquidity even with limited knowledge? Because what Gamma is going to do in the background is that it's going to manage your position for you in a way that it optimizes for fee generation while also mitigating impermanent loss, which is what we want, right? So on the DEX standpoint, you make sure that you have liquidity efficiently allocated, which will increase the fee you can capture. And on the LP sides, they're sure that Gamma properly manage their liquidity and mitigate impermanent loss. So yeah, it's the most retail friendly solution there is out there, I think. And so where things get interesting with the V33 model is that, so when you farm our token called Z, you can then lock it from a period to 2 weeks up to 2 years. The longer you lock it for, the bigger the governance power you're going to receive of our emissions. Because on Thena, the emission that goes to those staking pools, they're not decided by the team. They're decided by users who have locked our token. So let me show you. On a weekly basis, we have an epoch system that starts on Thursday and lasts for a week. People can vote for the pool where they would like to see emissions. So you see, I can vote here, 20% here, 40% here. And on this side, you can see the APR you're going to receive for voting for this pool. So where does the APR come from? It comes from two sources of revenue. The first one is the fees. So 100% of the fees generated on Thena goes back to those who vote for the pools. Actually, 90%, sorry, because 10% go to the NFT collection we launched. But you get incentivized to vote for specific pools through the fees captured by the pool and also through what we call bribes. So bribes is basically a way for protocols to access our incentives by incentivizing our token holders to vote for their pool. So essentially, let's imagine I am, I don't know, Radiant, the money market on BNB, and I want to have emission for this pool. When I choose the pool, I'm going to select a reward token, for example, and I'm going to say, okay, I'm going to bribe it $1,000. You're going to confirm, and then on the user side, they will see directly here the bribes and the fees. And so once the epoch ends, they will be able to see the rewards that they earned through both of those revenue streams. And so what it does is that Thena is essentially a self-optimizing DEX because over time, people are incentivized to vote for the pools that produce the most revenue. And this is a behavior that we want as a DEX, right? Maximize value for stakeholders. And in our case, for the Thena holders. So this is really an interesting dynamic because as a DEX, your main source of revenue is fees. But with Thena, you open up another revenue stream as you are essentially reselling your emissions. And you're interacting, you're becoming essentially the social hub for protocols looking to scale their liquidity in a cost-effective way. This is the basics of the V33 model. And then there are other specificities. So like when you lock the token, every week you're going to receive what we call a rebase. A rebase is supposed to partially protect you against the inflation of the protocol. So on Thena, you receive all the holders receive 30% of the weekly emissions in order to minimize the effect of inflation on their position over time. So every week, their Visa position grow and grow and grow. And this is a dynamic that aims to attract protocol to start accumulating and locking it. And we're seeing that we currently have more than 25 partners that are providing protocol-owned liquidity, that are bribing on a weekly basis, and that are farming and locking it because for them, it's a long-term play to reduce the incentive cost.
Just a quick question here. The epochs for the voting is weekly every Thursday, right? Because I saw some people
Yes.
asking that in the Telegram chat, and I wanted to point that out so people that have votes understand they have to be active weekly casting their votes.
Yes, exactly. It resets on Thursday at midnight GMT. So actually, it's going to reset tonight. And you're going to see you have a lot of fun in the last minutes because a lot of people are voting in the last 20 minutes because they want to see the APRs just last minute and do some change to optimize. So it's also a fun thing to watch.
Perfect. Sounds good.
I think I'm pretty done on the presentation side. This is the basics of the VE33 model, and I can go in more depth during the AMA.
Just a question before you stop sharing. Could you also go quickly into the NFTs, because you were one of the first protocols that smartly included NFTs into your ecosystem and provided great value for that. Because to be honest, I didn't see many DeFi projects being able to integrate that very well. And with you, I saw a very good approach, to be honest. And now I also saw a lot of other protocols doing, let's say, friendly forex, not so friendly forex, and integrating the exact same model. And you know exactly what I
Yes.
mean.
Yeah, I know exactly what you mean. Yeah, but basically, before launching, we knew that we needed fund to kickstart the ecosystem and that it would help us drive growth tremendously. But we didn't want to sell the token at a huge discount because we know how it always ends up. You have some private investors that get access to great discounts and they dump after the launch and it kind of like mess everything up. We didn't want to give an unfair advantage to specific people that had the early knowledge, let's say. So we decided to go with the NFT road. It was essentially a way for us to trade future cash flows from the protocol against capital now, which allowed us to bootstrap the ecosystem. Because in the end, we raise money, but this money is seeded back directly into the protocol as bribes, as marketing campaign, and everything. So in the end, you're giving money, receiving a non-dilutive asset because no other NFTs will be minted, and you earn real yields by taking a percentage of the fees that the DEX generates. So I would say it's a pretty fair way to kickstart your protocol and raise capital without screwing future investors.
That sounds reasonable and perfect. Thank you for the answer for that. Yeah, I mean, if you're through, I think we can go through the some questions I have on my side, and I have collected also from various people that talk, that asked me to ask some questions too.
Yeah, sounds
So
good. Do you still see my screen just or
no, we
because
don't
it
see your screen
kind of
anymore.
freeze?
It's just you and me on it.
Okay. Oh, weird. Okay. Yeah, sounds good. Let's move on.
All right, perfect. So, I mean, we saw what your what users can do on your protocol, but usually especially in the DeFi ecosystem, there's a very agile and fast way of things changing. And what interests me is, what is the overarching vision of Thena, and what do you think is the strategic role of Thena in the BNB chain ecosystem?
So, good question. Thena aims to become the main trading and liquidity marketplace on the BNB chain. And to take a step back, we need to look at the current user experience and range of features offered by DEXs currently versus centralized exchange. And our opinion is that the current UX offered by DEXs and the product offering are currently still very far from our favorite centralized exchange. No perps, or you have very limited asset choices and non-scaling liquidity. You have no options. You have little gamification. You know, like let's take the example of Binance. It's a complete ecosystem. We're here today doing a Binance Live AMA. It goes way beyond simply a trading marketplace. And currently, we do not see that with decentralized exchanges. And it's very hard, if not impossible, to provide an order book like experience, like what you see on Binance and other centralized exchange. It's AMMs and order book are like two completely different beasts. So we need to rethink the trading experience on chain and offer a product that feels as powerful or even more powerful when you're trading on centralized exchange. And for that, you need to leverage the specificities of decentralization and the flexibility that automated market makers can provide. So we have four types of stakeholders on Thena. We have traders, we have liquidity providers, protocols, which is the key part in my opinion, and finally token holders, where you want to maximize value for them. With a composable liquidity layer like Thena, the growth should really start from protocol side demand, as Thena was built as a protocol for a protocol. We envision it being the hub to raise, launch, and scale your liquidity and the trading activity around your token. That's basically the vision we have.
All right. That sounds perfect, and it exactly leads to my next question, because as we know, you said you compared the centralized exchange experience to the decentralized exchange experience, and we know that the DeFi landscape is ever evolving. Like, it changes so fast, and there's really a lot of room for growth and innovation. And my question would be, how does Thena plan to stay ahead of the curve and continue to innovate? Like, you mentioned that the topic with the perps, so maybe something in that direction. I don't know. Let's see.
Yeah, so it's not specific to a particular feature or product. In the end, we need to stay focused on what we want Thena to become over the long term. So prioritizing what drives the most value to our protocol, and that goes by answering people like our users' needs and find product market fit for what we release, right? Overall, we want to drive a superior experience for traders, LPs, and protocol alike. So I'd say you can break it down in 3 focus points. The first, you want to always stay at the forefront of innovation in the space. So we always want to make sure that we can challenge the status quo, what's being offered right now, and instead think outside of the box and how we could actually improve of what already exists, instead of just forking and taking the product as it is without improving it. We live in an open source industry, and I think it's amazing. Thena was born also from another code base, and now it's completely different. But the fact that we're open source allows the industry as a whole to grow way faster. So we should take advantage of that and always think outside the box. The second, and it's specific to Thena, is to have a successful DEX with the V33 model. You need to become what I call a social hub on your chain. And that means building long-term relationship with key players in the ecosystem. We want the best protocols to build on Thena, essentially. And that goes by essentially acting as a connector between protocols, because we've realized that that's what's driving the most value. And when you're working alongside partners that are also pushing forward innovative products, this is how you stay in line and make sure your products stay competitive over time. You want to work with the best. But that goes without saying, but you need to adhere to strict security practices, because we're talking about how to stay ahead and continue to innovate over the long term. But once you get exploited, innovation completely stops, and you have more than 60% chance that you will never recover. So it's about innovating and breaking things, but in a way where you make sure you have strong security practices when it comes to releasing a new product. And well, if I can add as well, it's in our opinion, it's super important to stay in touch with your community and the broader DeFi community. Once again, you have a lot of awesome team spending time and resource testing new models so that we don't have to. So staying connected is also very important, and listening to the space as a whole.
All right, that's perfect. Before I go to the next question that I prepared, I have 2 questions from the chat, if we can tap into that quickly to make sure that those are also answered. AIP STR Apester asked, what measures are there to keep the token stable?
I am not sure I follow. Are we talking about the value of the V token?
No,
the
Z token.
The
Exactly.
Z token. The main the main mechanism on Thena and on every protocol that use the VE model is not with the traditional burn, buyback and burn function that I saw a lot of users are asking. It comes from the locking. We incentivize people to lock their tokens instead of dumping them, for example. And the lock is on average a 2 years lock. So it's essentially removing them entirely from the supply. We currently have around 70% of our supply that is locked, and at least 50% of our weekly emissions are getting locked up on a weekly basis. So we cannot guarantee stable value. However, over time, by driving more value, building products that drive revenue for token holders, this is how we incentivize people to lock, and this is how we counter early inflation from the protocol.
Exactly. And one thing I would like to add for that question is these kind of protocols, people have to understand that especially the lock part is key to success, because what people do or other protocols do, they farm the token and they lock it so that they gain more voting power to vote on their own LPs, which allows them to provide higher yield and attract more users to it. So this self-regulating cycle helps first grow the protocols that work with Thena and at the same time grow the Thena ecosystem. So it's like a win-win situation. That's why it's very important that the lock time paired with the voting power is understood very well. AIpster, that was for you. Then I have another one from the community. It's will Thena have other services such as leveraged LP farming?
Yes, definitely. Whether it is from us or from a partner, this is something we're going to get into a bit later, I guess, in the AMA, in the way we intend to grow our range of features. But yeah, and actually, some protocols on top of Thena are already providing this service. You can go on Taro, TAROT .finance, and it basically allows you to leverage farm on Thena.
Very interesting. Tarot Finance, right?
Yes, exactly. Pretty cool
Exactly. Yeah.
protocol.
Yeah, I
And
know them very
been
well.
battle tested as well. So yeah.
That's great. I will show that to them at the end of the stream so that they know if they want to do leveraged LP farming, they can use that. Perfect. Then I'll continue with my questions. So when we look at what sets Thena apart in the DeFi space, we said it creates unique value for its users through constant development, adapting quite fast to changes, offering the V33 model with narrow and wide strategies. What else do you think you provide for the users that gives a unique value?
In the end, users, what they want is a stable return on their assets, right? When you invest in a DEX that early on, you're making a concentrated bet that it's going to be successful. And as I said before, a DEX like Thena needs to act as a social layer for protocols. Why? Because all this system of locking, a big share of the locking demand comes from protocols who want to acquire governance control over our emissions. So it is essential that Thena stays connected within the entire space and all the main actors that drives value with their own products. Because what we want as a DEX is volume that generate fees. And from Thena's standpoint, it's also bribes that increase revenue for token holders. So if you consider that Thena is unique in how it positioned itself in such a short amount of time to become a global connecting hub for protocols. We're seeing many collaboration between protocols that didn't even know each other a couple of weeks back. Protocols decide to partner up. They scale liquidity pools with, both of their tokens, reducing the cost of incentive even more and driving more revenue for the token holders. So each time we onboard the new protocols, the value flows back directly to those who locked our token. And this will work for every feature that we release on Thena. It's a community and protocol-owned DEX, and all the revenue that we make, whether it is through perpetuals, through spot trading, through options, or whatever we will release in the future, the fees will go back to those who lock the token. And this is how we drive value to them.
Perfect. So you touched on a very good point. Just before I continue with the other question, you mentioned that the fee split will be done with any kind of innovation that you provide. So, just as an example, if you go with perps, are you thinking of a similar model to just as an example, what GMX did with their GLP, where people provide
No.
LP, or are we talking about different forms of revenue? I know maybe I go too much into the detail. I know that at some point, of course, there will be a lot of developments, but just to make sure that our friends here understand, because someone asked how much can token holders earn from the perps. Someone asked in the chat. That's why I'm translating
the
it to you.
the potential revenue that we can make from perps is honestly insane if we manage to drive adoption, and I'm sure we will. Our model is completely different from GMX or Level.finance on the BNB chain, or even GNS. Like, it's not margin trading and it's not P&L trading directly. It's a model that is based on request for quotes. This is something that we're seeing more and more, especially on BNB. It's a permissionless and decentralized system that connects you directly with brokers that are going to compete to provide the best contract possible based on what you want. And the one that wins the contract will basically hedge the position on the other side and take a spread in between. And that means whether we're looking at the entire fees that we take with Alpha, it's the name of our perps, of our upcoming perps products. We beat them on every different kind of metrics in terms of capital efficiency, in terms of fees that we take. And just want to make it clear, perps is a product that is built alongside one of our key partners that will unveil soon. But so what that means essentially for Tina, but then I'm already saying too much, because I guess this is a point I was supposed to touch a bit later on.
Yeah.
But we do not need to scale liquidity at all in order to
provide it.
yeah, exactly. This is not our job. And what does that mean essentially is that it requires zero emission, zero token incentives from our side. It's just pure profit. Now, I don't want to get into specific numbers. I can tell you one thing. It's that every 10 million of daily trading volume on perpetuals, we can make $6,000 that goes to Visa. And to give you a point of reference, Level.finance, the biggest perps platform on chain, on the BNB chain, was doing pre-hack, because I know they had a small exploit on their referral program. They were doing 150 million, and on good days 200 million per day. And now they're doing around 80 million. And the market is a bit calmer at the moment. So I will let you do the napkin math and
exactly.
and,
So
and see for yourself.
so it's funny. I will not mention the name, because I think everyone who listened to my last AMA knows the system. Because just for our last AMA was with Lafa Chief from Deusdao. And I think the ones who really listened into it and understood the system with the request for quotes, RFQs, should understand how that works. But we will not dig deeper into that. Let's continue with the questions. I think the chat is happy that we discussed this, because they wanted to know about how they can earn on that side, because usually people have GMX in their minds with the GLP, but that's completely different, which helps even add more value. I personally am a big fan of this. So let's see. The next one I want to ask you is, one big topic in DeFi is how we can get those traditional finance institutions into DeFi, and how we can bridge the gap. So could you elaborate maybe how Thena, like your approach of Thena, bridges the gap between traditional finance and DeFi, and what impact you believe this could have on the whole ecosystem?
So on our side, when mentioning TradeFi, once again, our reference point is centralized exchanges, whether it is for crypto or eToro, whatever. And our main goal is to be able to complete head to toe in terms of product offering and user experience, while keeping the non-custodial and permissionless features that blockchain allows us to offer. And this is, like, I cannot repeat that enough. This is why we're building in DeFi. This is for those criteria that sometimes it's hard to value, but this is key to develop a better financial system. And also, one other thing, I feel like it's important to note that we're not here to replicate TradeFi. We're here to take advantage of blockchain technology to offer new ways of operating in finance, going beyond what is currently offered in TradeFi. Because just replicating it would be boring and it would be a suboptimal system. We can make way better system with blockchain and way more inclusive. And this is why we're building Athena alongside other great partners. When it comes to the impact it could have on the broader financial ecosystem, well, it's just that it removes all kind of barriers to entry. You don't need to run through centralized parties to start doing your business, to fundraise, to invest. It's basically will come a time where basic education in finance will become kind of like mandatory because it's going to be so inclusive and it's going to drive so much value by opening up the market even more that it's even hard to picture right now the impact it will have in 20 years, because also we're a very long way from actually disrupting the TradeFi ecosystem. So it will definitely have a huge impact from all sides. But I would say the short-term impact that we will see is access to capital markets, whether you're from Africa, from Asia, or anywhere else. And as soon as we start tokenizing real-world assets, and we can tokenize debt from PME or for small and medium companies, it's then you're going to start unlocking the true power of DeFi. But we have a lot of missing pieces before that.
Exactly. Here I want to point out that people understand the whole derivatives market in general in the TradFi industry is a few thousand, even 10,000s of times bigger than DeFi at the moment. People sometimes think, yeah, DeFi is too big already and it doesn't make sense. You know, some people that do not understand TradFi at all. I don't want to be, picky here, but please compare the current DeFi ecosystem to the TradFi ecosystem and their products, the similar products that we offer here, and then you will see the growth rates and the growth potential in the future as soon as we all also have regulations established that help foster DeFi a bit better. Because at the moment it's kind of a how can I say, a gray zone legal wise, depending where you are. But as soon as we have that in place, it will be much easier to tap into the whole TradFi ecosystem and, you know, also partner up with them. Imagine now you're partnering up with different DeFi protocols, but in the future there will be brokers, custodians, there will be big family offices or other type of financial institutions where they will say, okay, I want to offer that to my users, and the capital that flows in will be 100 times more than we have currently in the DeFi space.
Exactly. Completely agree.
That's perfect. So then a very important question is that, I mean, what is your plan of the plan of Athena to leverage your unique tokenomics to full growth and at the same time create tangible benefits? I mean, we tapped into it a few times in different ways, but I want to keep the dedicated question so that people that listen to it also afterwards understand, okay, now we talk about the unique value of the tokenomics and they have the answer directly.
Yeah. So as I said before, the V33 tokenomics, it essentially opens up a new demand on the protocol side, where now you not only have investors that want to get exposure to the performance of our DEX by investing in our token, you now have protocols that are going to invest resources, so protocol owned liquidity, bribes, and different kind of strategies to get cost-effective liquidity incentives. And so right now, as I said, we have more than 25 protocols battling for votes on a weekly basis based on the free market. And the thing is, for them, it makes a lot of sense to acquire and lock the, whether it is dumping, whether it is pumping, whether it is at a high valuation or low valuation, because it's a long-term strategy for them to cut heavily on their spending to scale their liquidity. And when you consider all this, our model can give us a considerable advantage when it comes to onboarding upcoming protocols and to have them first on Athena, because this is what you want to do as a DEX, right? Your bread and butter is to have the listings, same thing as a centralized exchange. They're battling for new listings. I want the liquidity of top upcoming DeFi protocols to be on Athena and nowhere else. And how do you do that? You do that by providing them effective solutions, better solution than elsewhere, so that they will spend time and resources on Athena. And once you converted a user and a protocol, and the protocol actually have a long-term strategy that is in action, he's converted. He's not going to move elsewhere, because this is part of a long-term commitment that will be beneficial for both our token holders and our protocol as a whole, and for them. And this is how overall we do business on a daily basis. Collaborations needs to drive value on both sides, and Athena is uniquely designed to attract and retain those protocols. So now if we can manage to get those top DeFi protocols to launch their token on Athena, well, this is how we become number one. We want to be the go-to trading marketplace and native liquidity layer, to repeat it once again. And this is how we're going to do it.
That's perfect. Thank you for the answer, everyone. I have one question from the chat again. The question is, do you see mercenary farmers as a problem? I think he means, or she means, that the self-serving capital provided by investors as a means to profit from short-term incentive programs. I hope you understood what I mean.
Yeah, I understood. It's almost a philosophical question. Now, because at the same time, there is no way you can manage to get to 500 million TVL if you do not get mercenary capital that is just interested in dumping the token for USDC and get abnormal return by getting exposure to DeFi. This is something that we cannot stop. And I've seen models, so you have different models. Some VE models use the boost. So if you have locked tokens, you earn a higher APRs. Some are choosing maturity-based models where your yield increase as you stay in the LP for a considerable amount of time. The only issue is that it just redistributes yields from one to another. And if mercenary capital is not there, it's elsewhere in one of your competitors. So we just need to deal with it. It's obviously, it's negative for the protocol as they continuously dump, but you also need to take it into consideration. It's open, anyone can provide liquidity, whether it is $1 or $10 million. And obviously at some point people want to realize profits. So it's a good thing because it allows us to scale and drive more volume. And it's a bad thing because, well, especially when you're in a downtrend, those big liquidity providers are hurting you even more. You can definitely feel it. Hello?
Sorry, I was muted. Sorry for that.
No worries.
So, I was talking, I said thank you for the answer. And, you know, these kind of mercenary capitals happens a lot when liquidity mining aggregators aggregate your pools, because I exactly know how that works on that side. But you said it perfectly well, because it helps scale growth. And as soon as those people that maybe sell, or protocols that sell, see, okay, wait, I could profit from it long term much more. And by locking, getting voting power, raising, you know, the power at the end, it will provide much more benefit at the end. And one person asked a perfect question, which goes into kind of my next question, because I want to know what are the key areas Athena is looking to explore to bolster its offering and reach, and I mean that's connected in terms of partnership and collaborations. Like, let's say we have a lot of founders here that are listening to it. How do you think they shall approach you, and how do you think you can, you know, grow the reach with that?
I mean, grow our reach towards protocols so we can onboard them first.
Exactly, both sides. I mean, it just to show everyone how they can collaborate with you, what kind of partnerships they can go into with you, what you offer in general to other protocols. Also, aside from, you know, just Athena. I mean, you also have I know that you have a great development team too. So there's many ways how people can work with Athena and grow the protocol, but at the same time also maybe go into different directions.
Yeah, but there are many ways to collaborate. The first is the services we can provide, which is helping you scale your liquidity in a cost-effective way more effective than with other DEXs. And this is the core of our business and how we're supporting partners. Then how we reached out to them, it's when you're focusing a lot of your time and resources toward building relationships with protocol, things can go pretty fast. Like it happens at least 5-6 times per week that out of the blue, one of our partners creates a group with another protocol that heard of us because they talked with other partners. And this is currently how it goes. You start with like the close circle of partners, and you go on AMAs, you write articles, all the basic information, and then you let your network do the rest. Then you have a more standard way. You can go through our Discord, open a ticket. We have tickets for marketing, for business development, for every kind of partnerships. So on our side, we're always looking to get in touch with established protocols, new protocols, and see exactly how we could support them. And if we cannot support them directly, we will always find someone else that can support. So it's about receiving and giving. And then we're currently working on kind of like standardizing our product offering so that there is an easy way to understand what you can do with Thena. There is still a lot to do on the content side that we're working on currently. And then it also brings me to one of our upcoming products that I will talk a bit later on. But in order to get the newest protocols that you want before anyone else, then you need to be able to support them right from the start. And so to do that, the best way to do it is to launch your own accelerator, if I may call it this way, because we're not going to be a real launchpad. And I will touch on it a bit later on. But by supporting protocols from its early days, you make sure that you convert them and build a long-term relationship way faster.
I absolutely agree with that. As I know, at the beginning of Thena, you also had various collaborations in place. A lot of those protocols saw you also in the early days and supported you, which helped manage growth and also get your ecosystem out there and at the same time get the volumes up. That was a great approach, and that's something I want to touch base quickly from my side, also for our community here that's listening, because a lot of people think it's always just a competition, but it's not. Actually, if we collaborate more and collaborate in an honest and with an honest approach, all of us can grow together. Especially in DeFi, there's a lot of potential for collaborations, and we should use that to the fullest extent. And that's why I think you were also very successful so far with growing liquidity, raising the TVLs on your platform, and in the future, I'm pretty sure that it will further grow. And this also leads a little bit to my next question, which is, with these kind of protocols, I mean, you mentioned that Level5 had a small exploit with their referral system. So that's, we call it security. And to make sure that investors or LP providers, traders, and so on use the platform, we need security and trust, which is crucial in DeFi, right? And I want to know how Athena is addressing these aspects, especially considering the sophisticated financial transactions on the platform.
Yep. Well, so there are different cases. First, if it's built in-house, then we have a developer that is responsible for their overall product, for the overall creation of the smart contracts. Then it gets reviewed internally by other developers. Then it gets reviewed externally through other teams that we know as well. We always do that for other protocols as well and kind of like help each other. This is like the number one basics. Then the next step is you're going to want to start an audit. So the minimum, the kind of audit also depends on what your smart contracts are touching. Is it just touching the bribe, and then the worst exploit that can happen is the bribes are lost for a week? You're going to accept to go with like a traditional, let's say not a tier one, but a regular audit company that still provides good services. And at least you can get a date quite soon and not wait for 6 months. Then when it comes to like your product overall and making sure that it is secure, there are very few companies that I would trust to make a proper audit. And after receiving the audit, I would be like, okay, I can sleep well at night. Currently, we're doing an audit with a tier one company. I cannot disclose the name until we have the final reports, but it's a company that audited blockchains, very famous blockchain, layer twos, and the biggest DeFi protocols there is in the space. We expect the preliminary reports to be delivered on the 6th of June. So a big audit overall for your product, you need to have at least one. Then when it comes to integrations with partners, because this is one of the way we're going to scale with Athena, our bread and butter is trading, spot trading. And this is what we're good at, being the social liquidity layer and a top text on BNB. And then we want to obviously have the full range of products that a centralized exchange can offer, for example. And for some of those features, we're going to work with who we think is the best in the space instead of building it in-house, like we're doing it with the perps, right? Or like we did it with concentrated liquidity AMM in partnership with Algebra. And when it comes to that, we request at least one top audit. It's way better if you have two or three, which was the case for Algebra. So we decided to go with them. And the last point, which is crucial as well, and it should be mandatory in my opinion, is having a bounty at all times. We're currently updating it, but on Athena, on Immunify, we have 150K bounty for critical exploits. Those are the ones we mainly want to focus on. It's for me, and from experience, it's been like 3 years I've worked in DeFi, and I've done a couple of audits, but I can tell you that all the times I did audits, then we found some stuff, not critical, but we found some stuff through the Immunify bounty program. Paying white hats to try to hack your protocol is the best way to make sure that it's secure over the long term. So having an ongoing bounty should be a must.
All right, so thank you for the answer. I absolutely agree. It's all about making sure that your protocol is safe, and having these immune bounties is very important, as a lot of big protocols and projects do that and incentivize them really well. I mean, you can even see the leaderboards of the white hat hackers, and you will see that the number one white hat hacker, just so for people to understand how important that is, the number one white hat hacker received total earnings of $13 million just because he went. I mean, he's obviously a very great hacker, and he, showed that there were security issues with many big blockchain protocols and so on. So anyone here who is into hacking in a friendly way, go to Immunify and just try it out. I mean, you can earn money, and second, you help the protocols to become more safe. This is absolutely important. Thank you for that, Theseus. And then leading to going to my one of the final questions, let's say, I would like to have your insight and thoughts of the future of DeFi and how Athena plans to contribute and shape this future. As I said, there's a lot of other protocols, trying to get a piece of the cake, trying to grow. But what is Athena's like ultimate goal in contributing and shaping the future of DeFi?
So first, DeFi still has a long way to go before mass adoption. For now, it's kind of like a private circle where everyone makes more money by borrowing an asset, keeping exposure to the collateral, and leveraging it elsewhere, and vice versa. What we want is to start integrating with the real world, right? I expect the market to keep maturing between cycle, and that translates to money flowing into protocols that add real value to the ecosystem with more sustainable business practices, which we haven't seen up until now. We're also at crossroad, if I may say, in terms of regulation. We've seen MiCA getting passed in Europe. We're seeing the US cracking down on crypto protocols, but at least we can expect to have some regulatory clarity in the coming months or year. And that should also pave the way for real-world asset tokenization and fundraising mechanism directly on-chain. And this, in my opinion, will be the next big narrative and growth driver, because earlier we touched trends in DeFi, but most of them, they're just short-term trends that will never succeed over the long term. I think that connecting to the real world and deploying real-world assets on-chain will enable a lot of new use cases that will drive real value to the DeFi sphere as a whole. And Athena, as a decentralized exchange, will be the marketplace to host and generate liquidity on an exchange that is accessible to everyone, while everyone retain access to their own assets at all times. So this is basically what we're doing now. Then it's just a matter of getting ready to get in talk with those companies once they have the regulatory framework to do it, and to be first in terms of adoption and hosting their liquidity on Athena and enabling trading. Because then once you have liquidity on chain for real world assets, this is where the fun begins. This is where you can actually invest in real assets, use them as collateral, and borrow. And then when we're going to be able to have on-chain credit score with zero knowledge proof and that kind of stuff, this is where you can develop a real economy on-chain that is not just a private circle. And this is what I'm really excited about, and that Athena wants to get ready. We're in constant touch with the BNB chain, and we told them, as soon as you are in touch with protocols launching stuff around real world assets, we want to be there and talk with them.
Perfect. So you touched upon a very interesting point. I want to tap into that. You said real world assets. So because I have been preaching that a lot of times to many of my friends in general in this space, what I said was the first ones who are really building let's say real estate tokenization platform, and then further growing it, allowing people to use their tokenized real estate as a collateral to borrow money and reinvest. The first ones to do that in a secure and transparent way could really bring in unlimited amount of liquidity into the space. And I really love that you touched upon that point, because that's something I'm also currently researching a lot. There's also some projects I'm looking into that try to tokenize real estate, but I never see that they say, hey, we tokenize this real estate worth $1 million into 10 splits. You can buy with 100K a 10% share. But then it doesn't go further, because these platforms usually just make money based on the transaction volume on their platform, on their crowdfunding real estate platform. But they don't think about, okay, what if I could, collaborate with the DeFi protocols and say, hey, look, this is the proof of ownership, proof of asset, and everything. Could I tell my users to provide those as collateral and borrow not 100% value, but borrow maybe 50 or 60% based on the risk management metrics, and then those people could reinvest it again into the real estate platform, and it would create kind of the model that you created, where there's a win-win situation for both sides, right? I mean,
yeah, exactly.
This is absolutely, I'm really happy, because I didn't see many people talking about it. And I was preaching it all day. I said, hey, this is the next big thing. This, if done right, this could source in millions and millions of dollars from, from the, let's say, Web2 industry. And I'm really looking forward to the ones that will be able to implement that. And I'm happy to hear that Thena.fi in the future is also looking into those sort of things, because there will be very successful platforms that could collaborate with you on that side.
Yeah, definitely.
All right. So I have two more questions from the chat, if that's okay for you, and then I'll give you final thoughts and words, whatever you want to further tap into. One person asked, any alpha for Liquid Driver, or will all efforts be Athena?
No. But first thing important to mention is that we still have two separate teams for the most part. There are resources that we share between both, but overall, like, the development teams are completely separated. And Liquid Driver is still going with its own vision of how it will invest in the cross-chain ecosystem. Athena is just a piece of it, because obviously there are obvious synergies between Liquid Driver and Athena. And I'm not going to lie, it's also because I am the founder of both. So just for those who don't know, there is a liquid wrapper on top of the lock token. If you go through Liquid Driver, you can basically get exposure to all the yields from the lock tokens while remaining liquid. And this is a great opportunity for people to get exposure to Athena while being able to exit whenever they want. And in return, Liquid Driver take a fee that is redistributed to our token holders. And currently, Liquid Driver is not only focused on Thena, it is focused on the DEX cross-chain ecosystem as a whole, with a focus on the VE33 model. So there are definitely many upcoming stuff for Liquid Driver with a separate development team. I am still working as well on Liquid Driver on the strategy side, just a bit less on the execution side of things. But no, it's two separate topic, and we are going to work hard on both protocols to make sure they're a success. Is it me cutting or?
So can you hear me?
Yeah, I can hear you now.
Perfect. So before we tap into, final thoughts and anything that you want to push out further, I want to, I saw some topics in the chat. I will not ask the questions, but people have to understand this, that the current situation of the market, we're in a bear market, meaning that there's a fluctuation in TVL on every kind of platform. You can look it up on DeFi Llama. You can check all the protocols. There's a very big fluctuation, and that is not due to the protocol not doing their things. It's rather the investor side think, okay, I'll take out my profits. I'll do a short-term profit and try to use Mercenary Capital and go in and out as fast as possible. However, the protocols such as Athena that build long-term and in a sustainable way and continue to grow will be the ones that will be 100% ready for the bull run, and the TVLs then will most likely, I will not say of course because it will be a financial advice, but most likely it will rise because the main source of, let's say, challenges and problems in DeFi is really trust and security. And if you build for a year, 2 years, and then the bull market hits, people will say, okay, wait, who is really out there for the longer time and has provided constant value and growth and stayed consistent? And those protocols are the ones who will win and who will be very, very successful. That's why we touch base on innovations, we touch base on further growth, we touch base on real world assets, so that everyone listening really understands that DeFi is the go-to place if you want to create sustainable value and growth also for your own portfolios. And protocols like Thena offer you the easiest way to access it, to use it, without you having to understand everything the perfect way, because it's explained well, and it gives you almost a one-click investment opportunity. It's like you go to a bank and say, hey, I have 20K in my savings account, where I don't earn anything. Maybe I earn now, it could be around 0.75 or 1%, but I don't earn much. I want to go into a different product that gives me more. Then you tell your banker, hey, put my money into this, and he will say, yeah, the average return you have on this is 5 to 7%. Done. It's a very similar system, just on a completely different technology, let's say. I really want everyone to understand that these kind of things, because as soon as you understand how that works, you will realize, wait, we are really very early, and if I participate in these type of protocols early, that really provide value and growth, then I can be part of a very broad future. So,
and I will not touch on price, because this is something I do not want to specifically discuss as a founder. And price, in the end, over the long term, will be a reflection of the revenue and the growth Thena is driving. The first thing is to understand when investing in DeFi, it's that we're still a very low market cap. We launched in January, and I'm going to mention the price this time. We went from $0.15 to the top of $1 in a span of a month or something like this. And unfortunately, volatility goes both ways. You cannot expect to have all holders that will forever hold and no one will take profit. And taking investment decisions based on the trend of the chart has never been successful. So it's just about do you like the vision that we're presenting? Do you think that what we're building right now actually has product market fit and is in a position where we can grow in the foreseeable future? If not, then that's fine. But I just want to insist that on our side as a team, we're not focused on short-term volatility. We just want to keep building what we intend to build to drive further value to all stakeholders in our ecosystem. And I just presented what we aim to do over the coming months and even year. And I didn't touch all the points, unfortunately. So it's about what we're doing right now and what we're going to do in the future to keep driving growth in the protocol. And if you remove the vanity metrics, you can see that in the background there is a lot of work being done and a lot of work that is gonna be done over the next weeks. So it's more of a long-term decision to make, and do not get distracted by short-term volatility, because Athena is still a top DEX on BNB in terms of volume on a daily, weekly, and monthly basis, competing directly with Uniswap and the other protocols. Obviously, we're facing PancakeSwap, which has a monopolistic situation for a very long time, and we're not going to solve that issue in a day. It's going to take way more than a day. But on our side, what you can be sure of is that we're dedicated in making Athena the go-to DEX on the BNB chain, and we'll take the time that we need to do it. So that's my final thoughts.
Thank you very much, Theseus. So you wrapped it up perfectly. I want to thank everyone who listened uh, very much for joining us today, and the ones who will listen to it afterwards, because it will be recorded also on Binance Live. You can always look at it and go through it again. You can also share the stream to your friends that want to listen to it and want to hear how Theseus dropped some very big alpha on what they're building and what they did. Also, big thanks to you, Theseus, and Zero X Apollo for making this possible. It was a great AMA. There were some really great insights, and based on my last AMA with Lava Chief from DeoStyle, it was a great connector actually, because everyone who listened to the last ones and to this one will have some kind of thoughts about the future, and I find that very exciting. Um, Thank you everyone again, and thank you, Theseus. Hopefully we'll talk again, and have a great evening, day, and afternoon, everyone. Take care.
Thank you for having me, and take care, everyone. Thanks for tuning in.
So, perfect.